Is the traditional business loan application process a nightmare for you? Are you tired of banks asking for endless personal guarantees and collateral, or worse, demanding a pound of flesh in the form of your business's equity? You're not alone. The world of business funding is a maze. And for many founders, it feels like all roads lead to a dead end. But what if there was a different way? A path where your business's performance is the only thing that matters? A system built for the way modern digital businesses actually operate? This isn't about some secret hack or a magic bullet. It's about a revolutionary approach to funding that's putting power back into the hands of entrepreneurs. Today, we're pulling back the curtain on Uncapped Funding, a company that's been making waves by ditching the old playbook. And we're going to answer a question that's on every founder's mind. How does Uncapped Funding determine loan eligibility? Now, before we dive into the nitty-gritty, let's set the stage. Uncapped is part of a new breed of fintech lenders. They're not a bank, and they're not a traditional venture capital firm. There's something in between, offering a unique type of funding often called revenue-based financing. The key here isn't the name. Your eligibility and your repayment are directly tied to your business's revenue. This is a massive departure from the old way of doing things, and it's the foundation of everything we're going to talk about today. Let's start with the most significant difference you'll encounter when you apply for an uncapped loan. They don't care about your credit score. That's right. Uncapped doesn't have a minimum credit score requirement. This is huge. For years, a founder's personal credit history has been a major roadblock to securing business financing. A few bumps in the road, a late payment here or there, and suddenly, your dream of scaling your business is put on hold. Uncapped recognizes that a founder's personal financial history isn't always the best indicator of their business's health and potential. Instead of looking at a 3-digit number, they focus on what truly matters, your business's performance. So, if not your credit score, what do they look at? The answer is simple, your data. Uncapped's entire model is built on a data-driven approach. They use technology to connect directly to your business's existing sales and financial accounts. We're talking about platforms like Shopify, Stripe, and your business bank account. By doing this, they get a real-time, unfiltered view of your business's financial health. It's like giving them a live dashboard, not a dusty year-old spreadsheet. This direct connection to your data allows them to assess a few critical things. The first and most important is your business's revenue. Uncapped has clear revenue requirements. For most businesses, you'll need to be generating at least $100,000 in monthly sales. This might seem high, but it's a key part of their model. They need to see a strong, consistent flow of revenue to be confident in your ability to repay the loan. However, there's an important exception. If you're an Amazon seller, that monthly revenue requirement drops significantly to just $10,000. This targeted approach shows that they understand the nuances of different business types and their specific growth trajectories. Beyond the raw number, Uncapped is also looking at the trend of your revenue. Is it growing? Is it stable? Or is it on a downward spiral? They're looking for a proven track record of growth in sales. A business with a steady, upward trajectory is a much safer bet than one with volatile or declining revenue. This makes perfect sense. They are, after all, in the business of funding growth. Another key piece of the puzzle is your time in business. Uncapped requires that your business has been operational for at least 6 months. This isn't just an arbitrary number. It's about ensuring you have a track record. They need to see that you've been in the game long enough to have established a product, a customer base, and a consistent revenue stream. A brand new startup with zero sales isn't a good fit for their model, but a young, 6-month-old company with strong revenue growth is exactly who they want to work with. The type of business you run is also a major factor. Uncapped specializes in funding digital and online-based businesses. This includes e-commerce, direct-to-consumer brands, SaaS companies, and subscription-based services. Why the specialization? Because these businesses have the kind of digital footprint that Uncapped's data-driven platform can easily connect to. They can pull sales data from Shopify, Stripe, or other platforms to get a clear picture of your revenue. This model is much less suited for brick-and-mortar businesses that rely primarily on cash or in-person transactions. Now, you might be thinking, What about all the other stuff a bank asks for, like a business plan, collateral, or personal guarantees? This is where Uncapped truly separates itself from the pack. They don't require a traditional business plan. They don't ask for personal guarantees, which means you, the founder, are not personally liable if something goes wrong. And they don't take any equity in your company. This is a game changer. For many founders, giving up a piece of their company is a deal breaker. Uncapped's model allows you to raise capital, fuel your growth, and retain full ownership and control. The application process itself is designed to be as fast and friction-free as possible. It's a 3-step online process. First, you register with some basic details about your business. Then, you connect your sales and finance accounts to their platform. This is a crucial step where their credit decision engine goes to work, analyzing your revenue and growth data. Finally, you receive your funding offer, which you can then customize with an account manager. The entire process, from application to receiving an offer, can happen in as little as 24 hours. This speed is critical for businesses that need to seize opportunities, like buying more inventory for a seasonal rush or investing in a new marketing campaign. Let's do a quick recap of the eligibility checklist. You need to be an online-based business, like e-commerce or SaaS. You must have been trading for at least 6 months. You need to be generating a minimum of $100,000 in monthly revenue, though that drops to just $10,000 for Amazon sellers. They're looking for a clear track record of growth and sales. And that's it. No minimum credit score, no personal guarantees, and no giving away equity. In essence, Uncapped's loan eligibility is not a one-size-fits-all formula. It's a dynamic assessment of your business's health based on real-time data. They build a system that's tailored for the way modern businesses operate, valuing performance and potential over traditional, often outdated metrics. Their model is a testament to the idea that in today's digital economy, your past isn't as important as your present and your future. They're betting on your business, not your personal financial history. They're giving founders a capital they need to grow without the baggage of traditional financing. With that said, thanks for watching, and until next time.